Pleased to welcome our first company to present tonight, Global Energy Ventures, SXGEV. GEV is an energy transition company, enabling what could potentially be amazingly $1 trillion hydrogen market through compressed shipping. Their mission is to become the leading provider or a leading provider of storage and transport solutions for green hydrogen. Joining us tonight is GEV's Hydrogen Development Director, Luke Velatrop. Thanks, Luke.
Good evening. Thank you, JP Equity Partners, for hosting tonight's event, A Net Zero Carbon World. My name is Luke Velatrop. I'm the Hydrogen Development Director for Global Energy Ventures. I'll be filling in for CEO Martin Carolyn, who is stuck in Sydney given COVID restrictions. All right, I will leave you to read the customary disclaimer in the printed booklet you have received. Gotta love that. Global Energy Ventures is listed under the ticker GEV with a market cap of approximately 45 million. Cash remains in the $6 million range, which provides our near-term funding to achieve a number of key milestones. We're a lean organisation with diverse expertise across LNG, electricity generation, new ship builds, shipping operations, engineering, legal and capital markets. Importantly, management retained 13% of the common shares on issue, so we have material skin in the game. GEV is positioned in the energy transition, enabling the development of $1 trillion hydrogen market over the next 2 decades. Our mission is to become a leading provider of storage and transport solutions using compression. So when we talk about compression for hydrogen, it's a simple and efficient means of storage and transport. Firstly, it's important to understand our business model. We are not in the business of chartering ships like a traditional shipping company. We focus on the complete midstream sector. This includes the loading, shipping and unloading infrastructure. This is where we have intellectual property and a competitive advantage. So when we talk about project development, we are seeking to take our compressed hydrogen solution through to FID. We may then choose to partner for operations and financing under fixed take-or-pay style contracts that come with long-term stable cash flows, typically for 15 years or greater. This model is attractive to a lot of debt and equity providers that include infrastructure funds, pension funds, and sovereign banks. It's not a unique funding model. So while we don't have time to cover the complete hydrogen supply and demand thematic, it's clear that it will play a major role in decarbonisation and achieving a net zero carbon future. The opportunity to supply the expected demand through to 2030 is exceptional. A critical element is going to be to develop effective and cost-efficient methods of storage and marine transport, and that is where GEV is focused. So if you take that demand forecast and apply it from a shipping perspective, we're going to require a lot of new investment in shipping technologies to move equivalent energy as hydrogen. Today, there are 600 LNG ships in operation with 100 more on order, hundreds of dry bulk carriers transporting coal, and thousands of crude oil tankers. You might be surprised to know, but there are currently no ships operating capable of transporting pure hydrogen. So if you believe in the energy transition, then there is a lot of energy that needs to be transported by new vessels, and GEV is at the forefront of that opportunity. So let's quickly take a look at the green hydrogen supply chain and how compression fits into the large-scale green renewable projects that you have read about. On the left is the renewable energy generation and the electrolyzers that produce green hydrogen gas. In the middle is GEV's simple and efficient solution that stores hydrogen in its high purity gaseous form. And on the right, the downstream market and end users. So what are some of the advantages of compression? Well, it's a proven application of storage. It's commercial at low volumes, doesn't require massive scale, and this can get you to market quicker. It also has significantly smaller footprint, which removes some of the environmental and capital challenges of constructing new plants. We are also very flexible in the way that we load, and this is particularly relevant given that not all major hydrogen projects are located next to ports. And lastly, it is a highly modular solution. So to touch on GEV's developments this year, we have advanced a ship that uses standard compression operating at 250 bar. This is a similar pressure to a scuba tank. A key point is that compression is a proven, safe and reliable method of storing hydrogen. In onshore applications, it operates at pressures up to 700 bar. Our ship and supply chain is designed to provide a zero carbon solution through the use of electric drive engines and fuel cells. This is being supported by two global leaders in this space, Wärtsilä and Ballard Power Systems. We have also achieved the critical milestone for our full-scale commercial ship and the pilot ship. This milestone is approval in principle, which is the key hurdle to confirm that our design adheres to all regulatory and safety codes required for bulk gas carriers. In short, there are no safety risks to prevent further successful development. In March of this year, we also released a very detailed scoping study that demonstrated our compressed hydrogen shipping solution was more efficient and therefore delivered a lower levelized cost for distances up to 4,000 nautical miles. So what that means is that we're ideal for moving hydrogen from Northern Australia into Asia Pacific markets. These include Singapore, Japan, and South Korea. In summary, we have resolved the technical, safety, and regulatory elements of the ship design, and we have confirmed we have a very sound business case. So to quickly, what are we doing to commercialise this solution? Well, we're looking in two regions of the world. Firstly, in Asia Pacific, where we are looking to move hydrogen from Australia to Asia. And secondly, in Europe, where there are a number of supply and demand centres within short sailing distances. We can truly say that this is a global opportunity, but we have to pick the right projects that we think can be winners and attain our goal of being first to market. In August, we announced our first collaboration for export, the High Energy project on the Gascoyne coast of Western Australia. The objective is to position GUV and compressed hydrogen as the preferred transport carrier. The High Energy project includes ASX-listed Province Resources and its development partner, Total Eren. We often get asked, what are the attributes of a project that you're looking to develop? And the answer is really scale, location, and bankable partners. In this instance, the High Energy project is looking to develop 8 gigawatt of renewables capable of producing approximately 200,000 tonnes of green hydrogen per annum. That is well within our capability. The location, not only great for its solar and wind potential, is also suitable, as pictured here, because the coastline is uninhibited, making it ideal for the development of a greenfield export project with offshore loading. And most importantly, the partners are bankable. Total Eren has financed and operates 3.5 gigawatts of renewable power today. They have the balance sheet and support of Total Energies with a portfolio of customers. Quickly now, where are we at with the High Energy export study? Well, we were recently awarded a funding grant by the WA government, being one of only 3 successful applicants. The others were energy super major, BP, and APA Group, a multi-billion-dollar pipeline operator. We now have appointed the key consultants to commence the feasibility work and are looking to complete this study by the June quarter of next year. We'll also provide key updates along the way. To wrap up, let's review the development milestones of GUV. We have already achieved AIP, which was a material de-risking event. We are now working towards construction approval late in 2022 and have a defined roadmap in place to achieve this. Our target of being first to market with a hydrogen shipping solution is on track for early 2023. This is not very far away. We have commenced the feasibility for High Energy and have the funding support of the WA government to cover a material portion of our costs. Please watch for updates from Province Resources on the development of this upstream project. And as a reminder, this project is backed by a European major in renewables, Total Eren. And lastly, what do you have to look forward to in the next 2 quarters? Well, we are screening several hydrogen projects that are of a similar scale and bankability as High Energy. We're also engaged in various corporate discussions on joint ventures and partnerships to demonstrate the global nature of this opportunity. Importantly, GUV is also very interested in moving into the upstream production of green hydrogen. This can leverage our shipping solution. Developing a fully integrated renewable hydrogen project from energy supply to market offtake is a very exciting opportunity and one that can re-rate our company. That's all from me, but please keep an eye on our stock and feel free to contact Martin or I direct. Thank you again to JP Equity Partners, and I look forward to meeting all of you later tonight. Cheers.
Thank you, Luke. I am very pleased to welcome the second company to present tonight. That's Neo Metals, ASX code NMT. Neo Metals, they're actually well known to us at Bulls and Bears. Chris Reid and Neo's have been a client for some time, and it's been a hell of a ride watching the company develop. At the moment, they're focused on developing opportunities in minerals and advanced materials essential to a sustainable future. But I can tell you there's not many companies, if I could just grab your attention, guys, if I can tell you there's not many companies in their space that can actually claim to have already found enough lithium in the world to build a mine, to fund a mine, to operate that mine, and then to sell that mine. It's been a hell of a journey with Chris and Neo Metals. We've seen their share price run up from, I think it's about 20 cents to about 90 cents this year alone. And I'm sure Chris is about to tell you he hasn't stopped there. Chris Reid, Neo Metals.
Thank you very much, Bill, for the kind introduction, and to JP for putting this on. Good evening, ladies and gentlemen. It gives me great pleasure to tell you about the Neo Metals story. So what I'm going to talk about is how we're going to produce the greenest, low carbon, lowest cost battery materials in the world. There's a speed reading test. I'll take it you've read that. So executive summary, we have a clear focus on minerals and materials that are necessary to power the EVs and stationary energy storage sectors. We've got 3 core projects co-funded with strong partners, all reaching FIDs in 2022. We pivoted a number of years ago away from hard rock mining into more sustainable materials recovery and recycling. We're building up our team. We've got a very good track record. We developed the world's second largest hard rock source of lithium, sold that. We've returned about 87 million bucks back to the shareholders via dividends, on-market buybacks and capital returns. We retain well in excess of $100 million in cash and investments, no debt. Then you can see our performance. We're starting to get some tailwinds, but 2 years ago we were trading at cash backing, right? And we had not an insubstantial amount of cash. So fortunately there's some good tailwinds. Board and management are the largest shareholders in the company. And the clearing company for the German stock exchange has now overtaken Westos as our second biggest shareholder. What I'm going to tell you about today is our lithium battery recycling business called Primobius. It's an incorporated German joint venture with one of the largest German plant builders in the world called SMS Group. So we all hear, oh no, we're going to EVs, and that's an immutable fact that is happening. But what we don't realise is that these EVs have twice the carbon footprint of an internal combustion engine when they roll off the production line, right? So the difference is that these buggers have got batteries in them, and it's the battery materials that have highly carbon generating supply chains. Like we take rocks from Greenbushes or Mount Marion in Kalgoorlie, we crush them up, we send them to China, they get turned into carbonate or hydroxide, they get shipped all over, you get DRC, Congo, cobalt, it's crazy. So how do we actually take the carbon out? Because if you leave it like this, you only become net carbon positive in 7 years. We need to do it much, much quicker. And the only way to do that is to take the carbon out of the supply chain. So the next slide here is showing if we have a ton of batteries made from virgin mine materials, we generate 8 tons of CO2 per ton of batteries. If we use the normal recycling technologies, which melt it, pyrometallurgy, you incinerate the graphite, you incinerate the plastics, you incinerate the lithium-bearing electrolyte gel, right? So you get about half your mass recovery. So you generate 4 tons of CO2. The leading hydromet, where we dissolve it in acid and take out the chemicals, we can produce about 200 to 300 kilograms of carbon per ton of batteries. So what we did is essentially developed a flow sheet to recover these base metals, nickel, copper, manganese, lithium, instead of from a rock, from a battery. So what we've developed is we've got a two-stage process. We've got what I would call the equivalent of a concentrator. So think of the batteries as the ore body. So we have to shred them safely. They've still got charge. We've got a number of safety systems. We do it. We wet shred it. We're in an inert atmosphere. We've got fire suppression over the top. We take out the plastics, the copper sheet, the aluminium sheet, the plastics, and we're left with a black powder. That black powder's got the anode, the graphite, and the cathode. So the copper, the manganese, the lithium, and the nickel. And so what we do is we put it in sulfuric acid. The graphite won't dissolve. We filter it off, and then we just use solvent extraction that was, invented in Mount Isa, in the 50s. And so all we've done is adapted a base metal refinery to take batteries instead of ore. And, if I tried to say, well, what is the equivalent? If I've got batteries that are being made now and get them in 10 years and they're NCM 811, it's the same as having a ton of ore that's 15% nickel, 15% copper, 2% cobalt, and 2% lithium. Literally, you cannot lose money. And the system that we've done is very, we've designed it green. We recover 85% of our starting mass. We can produce cathode spec material without ion exchange. And our tailings is ammonium sulfate or a fertilizer, because we don't use sodium, we use ammonium instead, or ammonia gas. And we're actually in the finals for the German National Sustainability Award that get decided, we're down to the last three, gets decided in December. So that's our patent pending flow sheet. And to sort of show you our engineering studies, so our operating costs are just under $1,600 a tonne. And if you've got a tonne of laptop batteries or your phone batteries, it's about $13,000 worth of recoverable material in a tonne of those batteries. And the good thing is, they're now coming in cars, so they're much bigger than the laptop batteries. So it doesn't matter what we put into this thing, it makes good money. And so getting why we've got a German incorporated joint venture, well, outside of China, Europe is going to be the largest producer of EV cars. And so then it follows that Europe is going to be the largest cell production outside of China. And when they make these cells, they're all new at it, and you get really, really high scrap rates. They start off at 20 to 30, and they get down to 10% over time. So we're going to have scrap, and then you've got end of life. So, we are confident because we can see the battery plants being built. We know what they're going to need. We know what they're going to generate in scrap. And what we're even more convinced about is that these batteries bloody wear out. So you get one of these electric cars. I got one. After about 3 years, you lose about 25% of your range, right? After 8 years, these things you're going to have to toss away. So what this slide is showing is this is the total addressable market in Europe in 2025. The dark blue little bar is what the forecast was in April, and the light blue is what it is in September. So in 5 months, the projected volume for recycling in 2025 has grown from 200 to 335,000 tonnes. That's if they don't announce another battery plant. And they're announcing battery plants every month. So, a fantastic market. To put that into perspective, in Europe, the total installed capacity of the European battery recycling business would be 55,000 tonnes. So how do they add 280,000 tonnes in 4 years? That's where we come into it. And in Europe, they're going to make this stuff law. So you're going to have to recycle. You're going to have to meet these minimum recycling efficiencies that we already do. And you're going to get to carbon declarations and minimum recycled content, which guarantees us a market. And this is what I said, they need a solution. So our current plant, it'll operate at 1 tonne an hour, but we've only licensed it for R&D to run at 1 tonne a day. We've now put applications to go into 10 tonnes a day. We'll get that next month. We will start commercial battery recycling for the car makers and cell makers in Germany from the first quarter of next year. We will make an investment decision on the 50 tonne a day plant sort of mid next year. And then in a couple of years' time, we'll crank that up to 500 tonnes per day. But a very, very economic business. Who are our partners? SMS Group, 150 years old, 14,500 employees in 95 sites around the world, one of the world's largest plant builders. They'll build them, operate them. They've got best endeavours to procure the debt financing. They are the commercial delivery arm. And this is what the plant looks like. So where we're operating our demonstration plant at the moment, and the baseload feedstocks from a German car maker, is at SMS's construction facilities. There's 4,500 people there. Could you think of anywhere better to build it, right? And have a look at it. The front end's in the middle there. That's the shredding beneficiation. The back end's a hydromet refinery. I mean, seriously, this is better than most hospitals, right? I mean, this was invented in Australia and built by the Germans. So we're really, really happy. We'll complete the demonstration trials in November, OPEX, CAPEX to DFS level around Christmas, FID in the first quarter, and then inking supply contracts or to build the plant in mid next year. And we're showing speed to market. So we're going straight away to the 10 tonnes. Then we're going to build a 50 tonne ourselves. We've got a joint venture in the works with Steel Company of Canada. They need the end of life steel scrap for their steel production. They're going to give the batteries to us. We're going to split the profits. Fantastic hub and spoke. So you have different shredders around the US into a central facility. And then we've got a joint venture in the works with Itochu, looking at going to Japan and then elsewhere through Asia. So thank you very much for your attention. Happy to take questions afterwards. Have a good night.
Thank you, Chris. Pleased to welcome our third and final company to present tonight, Pilot Energy, ASX code PGY. Pilot is a junior oil and gas exploration production company that is aggressively pursuing diversification and transition to the development of integrated renewable energy, hydrogen and carbon management projects. Tonight joining us is Pilot's Midwest Feasibility Advisor, Rowan Logie. Rowan's founded many startups, advised ventures on growth and scaling, raised capital, served in directors' roles, led projects in a variety of industries. Welcome, Rowan.
Thank you, Bill, for the kind introduction. Thanks to the JP team for hosting, and thanks to those guys for driving past. And thank you all for participating. Just want to tell you a little bit about Pilot Energy. My main hat is as Executive Director for New Energy Technology, which is a diversified hydrogen business. But I also have developed a large-scale solar project, which is folding into Pilot Energy, and that's why I'll be speaking tonight on behalf of Pilot. So Pilot has been a traditional oil and gas business, 10 years listed SXPY, with an offshore oil platform in the Midwest near Geraldton and operations in the Southwest as well. I'll be talking mostly about the Midwest tonight. But yeah, a bit of an overview, $25, $30 million market cap, share price 6 cents or something like that, 500 million shares, going for 10 years. What I like about Pilot Energy is that it has material holdings with world-class wind and solar resources, and it has an existing offshore oil and gas platform, which it can use to leverage the knowledge, experience, footprint, operations, licenses, easements, and so forth that it has and associated with its existing oil and gas business to streamline its transition to renewable energy. So Pilot is determined to become a clean energy producer in the Midwest region. They also have a proven board and management and are well capitalized to progress through that transition. As you probably are aware, renewable energy is cheaper than fossil fuels already, and that's only going to increase that difference. Solar got cheaper about 2 years ago. This is the International Renewable Energy Agency data from 2019. You can see onshore wind got cheaper about 3 or 4 years ago. Offshore wind is nearly there, and we would expect by 2024 that will be significantly cheaper, and that will end up being a significant player in the energy market, offshore wind. You can see those two maps there. That's the wind resources globally on the top and the solar resources in Australia on the bottom. And you can see the Midwest. What I want you to notice is in the Midwest where Geraldton is, that's a sweet spot where you've got really good wind resources and really good solar resources. Let me explain why that's important. When you're trying to produce green hydrogen, there are two things which affect the financial model, which the big challenge to get hydrogen economy going is to get the cost of production down, right? We need to get hydrogen cheaper. So the two inputs into that are really, nothing else much moves the model. The two inputs are the price of your electricity to run the electrolyzer And so that's why you're getting all these big announcements about massive projects, because you get your cheap electricity by building multiple gigawatts of wind and solar. And the second factor that feeds into the reduction in price of hydrogen production is what's called your capacity factor. That's your uptime on the plant, basically, how many hours a day, how many hours a year you're running it. Now, if you're running it on only solar, you might have it running 35% of the time. If you're running it on only wind, yeah, you might get 40, 50%. If you're doing daytime solar, like in the Midwest, where you've got good sun every day and good wind every night, it is the world's #1 spot. And so Geoscience Australia have identified this as the world's #1 spot for wind and solar combination to do hydrogen production. It's also why the WA government have identified the Midwest as the state's renewable energy and green hydrogen hub. So a lot going for it. It really is a sweet spot. And that's right where Pilot already have their footprint. So the strategy here is start off with the existing footprint. As I said, the knowledge, the studies, the database, the operations, the license, streamline that through to the feasibility study for this overall project. And that feasibility study was kicked off in middle of this year, as per the ASX announcements, if you've kept up. Otherwise, you can go back and check them out. So those feasibility studies are well underway. My company, Greenfield Development, is doing the solar part of that. As I mentioned, Lautech is doing the wind. They're a fantastic French-based, French-headquartered wind developer. Done some of the biggest projects in the world, including being involved in the Star of the South project down near Tasmania. And the plant partner in that feasibility study is Genesis Technip. Now, about 1/3 of the world's hydrogen plants have been developed by Genesis Technip. So they really know their stuff. It's a great team to be a part of. We expect those feasibility studies to wrap up about, toward the middle of next year. Toward the end of that, we'll also start getting our permitting in order. That will carry on through next year. And by the end of next year, we'll be working on the bankable feasibility and starting to try to get that wrapped up. And in parallel to that, getting our consolidation of the partners. And there are many partners who do want participation in this space and aren't really in a position to generate their own projects. As I said, there really is a sweet spot here that Pilot Energy find themselves in. As well as there being, this particular spot being ideal, the world #1 for wind and solar combination, which is the combo, the magic combo to get your hydrogen production costs down. The WA government have elected this area and have dedicated resources and capital and are putting consortiums together around this area, around Okajee Port and so on. So there's good support there from government. There's a lot of international interest because many of the majors, particularly Japan, South Korea, Singapore, and others are seeing this spot for what it is, which is a world-class opportunity. And so they're wanting to come in and participate. Plenty of opportunities to partner there, which we'll start consolidating that toward the end of next year. Also, you've got the Dampier to Bunbury pipeline. So you've got gas, you've got port, rail, road, and the Southwest interconnected electricity grid. So you really have all the pieces there, and combine that with Pilot's existing assets and knowledge base, and what you get is an opportunity to do blue hydrogen quite quickly with gas, with their knowledge, with their footprint, and really importantly, to do any kind of economical production of hydrogen from gas, blue hydrogen in the next decade, you're going to have a cheap way to deal with the carbon. So you extract the carbon in the steam reforming process, and you have to do something with that. Now, Pilot have this reservoir, it's partially depleted, there's already infrastructure, pipelines, high voltage power lines. So what the study includes is looking at, can we use that reservoir to inject the carbon into? And we've already done a feasibility on that, and it looks good. And the price on that carbon capture and storage looks quite attractive. So that's really important piece of the puzzle here. Anyone who doesn't already have those infrastructure like that in place is going to have to fork out big capex and major works to get a process to deal with their carbon. So then there's the wind and solar resources, and you've got the state government, and around that area you also have a world-class magnetite region. So that's very energy intensive, processing magnetite, and it produces an opportunity to then look at the green steel industry around there too, which requires green energy to run the plant and green hydrogen to inject into the process. So plenty of opportunities to progress this transition. So a bit more of a look at the project. Thank you. Let's skip through to so what we've got is an offshore oil platform. And the idea is to kick off with a demonstration plant, very similar to a project that happened in Scotland called the Beatrice project, which is run by Scottish Wind and Power and a couple of other partners. So they had an offshore oil platform just like this, offshore oil and gas, close to shore, shallow water, and they decided to put up some wind turbines there, tie that back to the platform, use the existing footprint and infrastructure of that platform. And they found that was so successful that within 5 years, they started building out 85 turbines in that spot and now have one of the largest wind farms, offshore wind farms in the world, producing 600 megawatts of power for Scotland and the UK. So that's a very similar process. Now, Pilot intends to do that same sort of concept. Now, that's subject to feasibility study completion, subject to joint venture and regulatory approvals and ASX recompliance as well. The onshore components, there's multiple sites that we're assessing in this feasibility study for wind and multiple sites for solar. As I mentioned, my team and I have been working on some solar projects around here for about 5 years, actually. So that's very advanced. That would be ready to execute potentially within the next 24 to 36 months, the large-scale solar. And we're now partnering with Pilot to expand that out to multiple gigawatts and partnering with Lautech and Genesis on the integration of the solar, the wind, and the hydrogen production plant. Commercialization, there really are a lot of opportunities here. The products here are green electrons and green molecules, and Pilot is agnostic about how we commercialize those products. Plenty of opportunities to commercialize the green electrons into the grid, to produce green hydrogen, to power the magnetite operations or green steel operations. And as far as the molecules go, we can produce our own hydrogen. We can provide that energy or the hydrogen to nearby chemicals producers, produce our own ammonia, look at export, look at domestic markets. So lots of opportunities for a commercialization stack there, and we'll be pursuing all of them. And thank you very much for your time. And I'll be around, so feel free to jump in and ask any questions about Pilot Energy or about new energy technology. Thank you.